Two. Monitor for now. And worry about that. Just pain in the butt. Deal with right now. All right, so. All right, we're just gonna focus. Huh? So, what is happening? What is popping? Still waiting to do is studio. Down. All right, so what am I doing? First, I gotta fucking turn on my fucking camera. I don't know why it's not on. Broadcast. Oh, because I'm plugged. Oh, it's plugged in. Here's my camera. There we go. That should work now. Showing the road. So what am I waiting for? All right. Look at. Let's do this. You up over here? I've been trying to set up a fourth screen, but my setup's just running out of USB ports, and my C2C is just too far away from my little portable monitor to actually reach. So my Oculus Link port doesn't get enough power to it to actually power up the PC. So what I'm waiting for is if you were to look, I'm going to minimize this over to the right. All I really need right now are these two charts. I'm going to go to the left screen here. So right now I'm waiting for a retracement of this 15-minute fair value gap. If you were to look at the 15-minute chart, this is where our fair value gap is, and it actually aligns perfectly with a 5-minute I'm not fair value gap, fib retracement right here as well. There is potentially a new, there's a new pivot point low here. This would be a new fib retracement right there. Let's see. I also want to look at the overall market right now. And if we look here, let's see, this is 18. So this is 6 p.m. on Sunday. And we had some consolidation, and then it looks like manipulation is to the upside. We do, if we look at our left screen here, this is what I've been, oh, I'm going to drag these over to my other monitor. Cool, cool, cool. All right. So on this daily chart, if we were to go here to indicators, exponential moving average, I'm going to add two of these. From this chart. That middle chart. I'm going to add that twice. One's going to be the 9-period moving average, which I'm going to turn, personally, I like it to be red. All right. Line width, I do a little bit thicker. All right. And this is a daily chart over here on the left. I'm going to add one more moving average, the exponential moving average. Double click there, 18. All right, change the width a little bit. I'll keep that one blue. So right now we have two indications of a bullish daily bias. First off, we have blasted through these previous all-time highs, and we have a clear displacement to the upside on the previous day's what's it called, daily candle. Another thing that we have is you will notice here that we have our 18 or 9 period EMA above our 18 period EMA. That is our first confluence of bear bullish daily bias. Oh, let me press Control C. And then we also, if we go back not 1 but 2 days, if I were to mark this with horizontal rays on the top and bottom of this candle, you'll notice we've taken the previous day's high and we have completely closed and displaced above it, which is a second indication of bullish daily bias. Not only do we have those two confluence of bias, we have the previous daily high here and the all-time daily charts high here. Both of these points of buy-side liquidity were not only taken but completely displaced through. So we have three really good indications of daily bias being bullish. What I did, oh, geez, coffee's killing me. All right, so next what I'm looking at is if I move back to the center chart here, we have not only on the 5-minute a good fib level. I'm still getting used to the zoom and everything on Quant Tower. Good fib level here to here that was on the 5-minute, but if you move to the 15-minute, this is our most recent 15-minute fib retracement. I've been transitioning to 15-minute as opposed to using the 5-minute. Not only that, but if you look right here as well, we also have a fair value gap that aligns perfectly with our optimal trade entry, which would be the middle fib level here. So all I am waiting for is a 1-minute candle to come down and take this optimal trade entry and then reject by closing above it, ideally between the 62 and 70% fib level. I've stopped using the 62% fib level. I've been just using what ICT calls his optimal trade entry, which is off of this middle or this 79% fib. If we were to close, if this were to never touch the 79, close in between these two, I would wait for either the next candle to close above the taken level, but below the 50%, which means we're still in discount, or for it to take the 79% and then reject it by closing anywhere above it. Those would be my two entry criteria. So I also got to make sure I get on Discord here and in general, make sure I'm sharing my screen. Let's see, screens. We're going to do live. Perfect. I'll make sure Eric and if Ray ends up joining, Ray can also see this stream. On stream in the journey group. All right. Now, while we wait for this to occur or for an indication that we should be looking for something else, let me first off lock this for now. Right, perfect. So I will keep an eye on this left-hand side here for any new potential. It's going to be at least, it looks like, what, 20 minutes before we have a potential new 15-minute low to form. So we got time. I just got to make sure I keep an eye on this. I do want to show you something that I have been working on very diligently. Let me reopen OBS over here. Perfect. So what I want to show you is my business partner and I have been working really hard on a Discord server for the community. This is why I haven't been uploading a whole lot lately. Let me just also make sure I bring this over here so I can continue to watch what's going on. Now, I have been developing this as well as EAs or expert advisors, which is algorithmic trading, essentially bots, as well as a trading view indicator. Ooh, we might have an entry that will essentially do all of my pre-market analysis, like all the markups for your what's it called, your charts. Essentially, it'll mark all the fib levels for you automatically. It'll mark fair value gaps for you automatically, your sessions, start and end time, as well as the high and low. If it takes a high, it'll turn the dashed line at the top. I can actually show you what that looks like. Trading view real quick. We're also just making sure to keep an eye here. As you can see, we almost have an entry. So if you were to open up, say, trading view here, this is something I was working on before. I was just doing a picture example for checklist on our Discord channel. So we can get rid of this, and then we'll go to futures indicator, futures. I believe it's the one that says strategy, no fibs. Weird. All right, choose. Oh, no. This isn't in my scripts. Gotcha. Why is this? FVG strategy futures. Got it. That's why. FVG strategy. Oh, we might have an entry. All right. Don't know if this is the one that I was most recently. As you can see, I have a few of them. G futures. That's weird. My no fib one is not showing up. So we're gonna get rid of this. So as you can see, let's see if this is the right one. No, where's my actual? That's fucked up. Where could it have gone? Nope, still no entry. All right. Should be under my favorites. Strategy. Oh, I think it got potentially renamed by accident. Favorites as this one. That's probably what's wrong. Add to the chart. Yeah, this is, I renamed it by accident. So as you can see, it'll mark up all of your sessions. As you can see, when it takes a high of a session, it'll actually automatically mark that up for you. If we've taken just the high, it'll mark the whole background of the session as green. If it takes just the low, mark the whole background of the session as red. If it takes both, it'll just be the normal, background color of the session. You can, on your 1 minute chart, look at your previous days. As you could see, like we determined, we took the previous day's high and then displaced by closing above it. That's a bullish, bullish daily bias. Also have eventually for determining bias the daily 9 and 18 EMAs that we had used as well that you can toggle on and off. Another thing that I'm working on here is you can see that we can add our silver bullet windows and it will automatically see. I still got some work on coloring. It'll mark your midnight open, lots of shit it'll do automatically for you. It'll also do the fibs. As you can see, I got to fix the bias indication, but this would normally be a fib from here to here and it would mark it automatically for you. It looks really good too. I can actually show you a picture of what that looks like. Still don't have an entry. I've been keeping an eye on that chart. Let's see, pictures, screenshots, and there's a good picture of it automatically marking those fibs. Let's see if I have it in Discord. I sent it to Eric a few times. This is my business partner, so I'm just looking for. Talk for too much. Still no entry on our. All right, so. Oh, all right. Nope, that's not it. Where is it? Right here. See? It'll automatically mark your fib retracements for you, as well as the levels and the prices and everything. It's also going to have a chart in the bottom left hand of the corner of the screen where you can select from one of those checkboxes which strategy you're primarily trading at that very given moment. and essentially it'll automatically tell you where to enter, how many ticks your take profit and stop loss should be, how big your position size should be, and it'll do all that automatically for you, so that when you see price action hit the bid level like it's supposed to, all you have to do is have a trade position ready to open, just immediately open it, and then you can drag your take profit and stop loss to the proper levels. All right, so why do I have two of these charts? That's weird. All right, so as you can see, we still have not hit a trade entry. It is also just hit 8:17 a.m. I had already checked news for the day. Sorry if I'm space cadet. It's been a long morning. I already checked news for the day, and as you can see, we have no red folder news event for US dollar. So again, just real quick, while we're waiting on that, go back to the Journey Trading Group. I have my trading commandments, which are just rules that are unbreakable rules that you always follow no matter what. We also have our checklist, essentially, as well as picture examples for each of our strategies. Let's see. So that's that fib retracement strategy. I actually have a special... I'll go over that at some point. I have a special risk management method that I use that allows you to essentially curb half of your losses and actually profit about 25% of what your take profit would have been, even on like about 50% of your losing trades. It's actually something I've never seen anybody else really do, or at least definitely not the way I do. But you got all of your checklist here, as well as an actual spreadsheet checklist that you can physically check off while you're trading. For each of our strategies that we teach on the channel, or we'll be getting around to teaching. I'm going to delete this. This is all just development. We have admin logs. So ICT Went series. He literally goes through every single last one. My business partner's been hardcore grinding. Let me just make sure. Still no entry, almost. Keep an eye on this. He has been hardcore grinding through all of his content to make key takeaways and essentially like do all of the note taking and also create assignments for you, as well as a question and answer section for each and every one of ICT's most popular series. He's still working on this one, as you can see, part 4 and 5, but it goes through ICT mentorship, all the core content, has links to the original videos here, everything, as well as his 22, which is one of his most popular mentorship years, 2022 mentorship. He's just going through all of them, and it literally does 90% of the note taking and work for you. Let's see. We also have I talked about creating algorithmic trading bots that I've been working on, EAs for MetaTrader. And this is called the Optiminizer. And essentially, after you do an optimization or you run the strategy tester, you can drop your base ini file, which is just a essentially configuration file, and you can give it parameters like I want the max drawdown to be below this much for the testing period. I want the results for all of the individual configuration files for all of the results that had above this much in profit, net profit, and you can give it all these parameters, and it will take that XML file with hundreds or thousands of configuration files, and it will spit out a zip folder with just the configuration files for the the strategy, like, because you have for an EA like input parameters for your expert advisor, and those are for your configuration files, and it will spit out all of the best resulting ones so that you can test them individually and see where they work and where they could be better, essentially. And it does all that filtering and work for you, which is really, really cool. He actually built it directly into Discord, so all you have to do is drop your files into the channel that will be dedicated for that. And for our EAs, we plan on doing something like a leaderboard for all the strategies that do the best best configuration files for your for our EAs and shit. So like if something's really working, everyone can go to the leaderboard and just download that configuration file. Be super, super useful and helpful. We have a lot of stuff planned. So I think you guys will like what we got coming. All right. So we're still just waiting for an option trade entry here at our 70% fib level. Since while I'm waiting, I can actually look at the overall day. Excuse me. So one thing I do want to be careful of is watching out for potential reversals. We are in as I know we have a new viewer right now. I had explained we are in a strong bullish bias. There's no harm going over it again since we're just waiting for a trade entry. Let's lock this fib. We go to settings here. So no, I want the settings for the fib itself. A few things. I'm going to add time frames and do 1 minute apply, 5 minute apply, and 15-minute apply. This way it doesn't show up on this daily chart. Exit. All right. So what I was telling him is we have two moving averages, two EMAs that we put onto our chart, the 9 period and the 18 period. This is your first confluence for daily bias because 80% of your work is your daily bias. So if you look at the 9 period moving average, it's above the 18 period moving average. That's our first confluence for a bullish daily bias. We then go not back 1 day, but 2 days, and we mark the high and low of this previous day. And we look at what this day's price, candle does, and we read the price action based off of how it interacts with these levels. We can see it not only took the high of the previous day, but it closed and displaced well above it. If it displaces above it at all, that's still a second confluence for bullish daily bias. Just got to make sure I'm keeping an eye on my charts. So we actually have a third really good confluence. Right here, we can see we took this buy-side liquidity as well as this buy-side liquidity. This buy-side liquidity on the left-hand side here is actually our all-time high for this asset, like historical all-time high. Not only did we take both of these points of buy-side liquidity, but we moved way up and displaced way above them, which is a really good indication that we're going to actually just continue bullish for who knows how long. Could be another one of these movements for all we know, but we'll see. And we always just want to be ready for a reversal because we always want to keep in mind the power of 3, which is essentially on every candle, you're going to have a high. You're going to, from your open, have a high, a low, and then somewhere where it closes in between. Does not always happen like this. As you can see, I can't find you. As you can see right here, we have a candle that opened and just went up pretty much all day. A lot of times that happens when price is balancing back out from a big move down away from the actual direction the market's trying to reach. So this very well could just shoot up all day, but currently we're trading buy setups because we have a strong bullish daily bias. Now, moving forward from that, as you can see, I've actually moved away. I'm going to move back to the center screen here. I've actually moved away from using 5-minute fibs because we should actually only be trading from a few different top-down analysis, like a few different time frames and combination of time frames. What we're doing is we're moving from either the daily, and the way I use the daily chart is daily bias. That's 80% of your work right there. Second chart time frame is the hourly. From the hourly, we execute on either the 5 or the 1 minute chart. Otherwise, we're going to be doing daily to 15-minute, and then it's always from 15-minute to the 1 minute. And I have found this is my bread and butter that works best for me. I've found over the past couple of weeks, I failed a funded accounts. I'm transparent, but I am about halfway to the $9,000 mark where I need to be essentially that's the wrong account. But also make sure that I'm trading on the right account to practice S1. So on my funded, I'm about halfway to my profit target. Yeah, so I am actually trading how I would normally trade live because I have 2 account resets for Top Step. So I would not advise doing this. None of this is financial advice anyways, but I am actually trading hard on the team trying to get it passed real quick. Doing a full 15 contract limit. If you look at the commandments here on the Discord channel, if you have no active free resets, you always, in caps, trade your challenges or combines as if they were live funded accounts. If you have free reset account resets, you can use full leverage in order to attempt to quickly pass your challenge or combine if you would like to choose to do so. Don't have to. And again, we're still working on this, but as you can see, we have all of ICT's concepts that we're working on, condensing all the most important information with timestamps on his videos. My business partner has been working relentlessly on bringing this to you guys. And when this is ready, you guys are going to love it. All right, so we're still waiting. And the reason I'm trading this 15-minute fair value gap, as you can see here, or not fair value gap, I keep saying that, fib retracement. You can see not only is this a good 15-minute fib retracement, but it lines up perfectly with our 5-minute, one of the 5-minute fibs as well. And I've really just been trading 15-minute charts. Just way more consistent, levels are respected far more often. And again, we are marking up on our 15-minute, but we are executing on this 1 minute. So we are just waiting for one of two things to occur. We're waiting for a new 15-minute low to form, which it might. Not after this candle form closes, but after the following 15-minute candle closes. That would be our new trading range. Until then, we very well might have a bounce off of this optimal trade entry, and I no longer trade the 62% fib level and only trade the 70.5% fib level or the 79, simply because ICT teaches that these are your optimal trade entries. And I found that they're respected when they're perfectly engaged far more often. And I'm trying to cut out anything that's going to reduce my win rate. The way I'm trading, you only need to win 3 to 4 out of 10 trades in order to be up about 2%. And so we'll just wait. If you guys have any questions at all, you can ask in the chat too, and I will answer them to the best of my knowledge. Again, then it's not financial advice, but I am here to help if I can. All right, so we're just waiting. Also, if there's any suggestions that you guys want to see as far as actual video content, things that you want me to go over, and if somebody asked me to do a 6-month back test of this fib retracement strategy, which I actually have a special way it's that I haven't shared publicly, and it'll only be shared on the live streams. Essentially, try and get some engagement, but essentially, you take this 27% fib level, and instead of having just a take profit at the top of your trading range and a stop loss at the bottom of it, say we're going bullish, you'd have one take profit for half of your position size at the 27, half of a take profit for half of your position at the top of your trading range, which is your full take profit. And when price, say this were to have been an entry, hit our optimal trade entry, when we hit this 27% fib level, we exit half of our position. We change the stop loss to half of our position. So if you're saying 10 contracts, we would change it from 10 contracts to 5 contracts. We would move this up to one single tick of profit. This completely curbs your risk on this potentially trade. If price were to reverse, you'd actually make a tiny bit off of that reversal. And so that way, essentially, you're taking profit on half your position, a very small profit just above break even on the other half. Or if price keeps pushing and hits the actual full take profit, then you'll take profit on the whole position. But this allows you to cut out about 50% of your losing trades and actually make a little bit of money off of your trades. And I'm telling you, it brings up your net a lot. I'm actually working on figuring out good take profit levels for all of my strategies, not just my fib retracement strategy, such as my 1-minute breakout strategy that I use very often. I have a fair value gap strategy that utilizes 5-minute or 15-minute fair value gaps. And I was saying earlier, this is actually a really good fib level as well, because if you look here, we not only have this 15-minute fib retracement, but we have a 15-minute fair value gap that lines up perfectly with our OTE or optimal trade entry here. So not only is it touching and tapping into our fib levels, but it's tapping into our fair value gap here as well. But as I said, we have a new low that's formed here, and if this doesn't reverse and come hit one of these levels, this will actually be our new fib retracement on the 15th. But still watching for the next 12, 13 minutes almost, our 1 minute chart, and seeing what it does. Ooh, I keep moving it. Accident. I think I'm going to lock it again, so I can't move it by accident. All right. So, yep, we're just watching this 1 minute, and we're waiting for a 1 minute candle to sweep either our 70.5% or our 79% Fibonacci retracement levels, and then reject the swept level or levels by closing above them. If it closes, sweeps a level, and then closes below it, say between these two levels, and never touches the 79%, we're waiting for a candle to either close above the swept level, but below the 50%, which is still in discount, or we're waiting for the next candle to sweep the lower level and then close above it, anywhere above it, and reject that level. That would be our entry on candle close. So it looks like we may actually have a sweep here. It's sitting on the waiting for an optimal trade, no longer trade the 62% fib. It's fine. You have sweep, you're either in drawdown, you're waiting for price to come back up, or it just doesn't get respected and we have a closure. Another thing too is if we ever have a full 1 minute candle closure below the 79% before a trade entry occurs, then we don't trade this range and we just wait for the next range. So if we don't have an optimal trade entry where it sweeps a level and rejects and just shoots straight down and it closes below, we do not trade the range anymore. We wait for a new range. All right, so let's see here. 5 seconds left of this candle. We're waiting for this middle or this bottom level to get swept, taken. If this were to have closed below the 50%, I used to consider this a trade entry as well, but I only trade what ICT calls the OTEs or optimal trade entries, which are these two bottom levels here. And I believe you also want the candle closure to be with below the 62%, because that leaves you with at least a 1.5 to 2 risk reward ratio. All right, so 27 seconds left of this candle. Finish this trade. Make sure it's on the right account, correct? I also want to check here too. On my right-hand screen, just keep an eye on that. I have the DOM right here, and you can see that what 48.85, 48.85, 75-ish cents. So just below at 48.83 is actually the bottom of our range. We have a lot of what's called volume-based support. If it was above our price, it would be resistance. I mean, we have a little bit, yeah, it's pretty much towards the bottom of our range. Now, that would be a third good indicator. We can actually see that we're building support and resistance right here through these orders that are executing. But it's not required for you to have a good bounce off of volume-based support or resistance, but it is an added confidence that you can look at. All right, so we are moving back down again towards our and again, I am trading far more contracts than I normally would. What I would do essentially is I would take the price from here, essentially, down to here, which is 8 ticks, and the price from here down to here, which is 6 ticks. And if we take this level and then closed above it, I would essentially trade 1% based off of this price movement or 1% based off of this price movement. And I'd have that ready to go. And I'd know exactly how many contracts I'm going to enter before price ever hits this. But again, I have a free set, so I'm going hard today. Again, if I don't have an account set, I trade exactly how I would, and I treat this account exactly how I would for a live funded account. Again, that is up for you to decide. I just, again, I'm pretty confident in strategy, and I try to get this passed and funded this week. For the new viewer, all right. I'm going to keep this open on the middle screen here, but I can show you what we're looking at. So we're going to go to my left screen here. This is our daily chart. We determine daily bias through 2 or 3 ways. We use the 9-period EMA and the 18-period EMA on our daily chart. 1 minute, just watching this 1 minute candle because we might have an entry here. And I'll come back to how we're determining daily bias. Daily bias is like 80% of the work. Always something. All right, so we might have an OTE, which is a sweep of one of these 2 fib levels, and then a rejection by closing above. I have stopped trading rejections off of the 62% fib because it's not, ICT doesn't consider it an OTE or optimal trade entry. So, also, to our third new viewer, if you have any questions at all, feel free to chat. Post it in the chat, and it's not financial advice. Just what I would do in the theoretical situation. I will answer it as best I can. Yep, you got it. Just moving back up. Backward bias. If 9-period EMA is ever above the 18-period EMA, that is confidence for a bullish daily bias. It's bearish in the other direction, and it's below the 18th. Our next confluence, we go back not just 1 day, but 2 days, and we see how the previous day's price action reacted off of the previous day high and low. As you can see, we took the high and then we displaced by closing above it. That would be a second confluence for bullish daily bias. Then we actually have a third that doesn't always get used, but you can see buy side liquidity here and buy side liquidity here. This is actually our all-time historical high that we ended up taking and very clearly displacing above. That would be a third confluence that we clearly displaced these 2 buy side liquidities and highs. So we have 3 strong confluences for bullish daily bias. I had gone back and I had explained I have been trading just the 15-minute fibs and fair value gaps. And this entry that we're looking at here, we've not only hopefully going to be touching a OTE, but we also have a 15-minute fair value gap that lines up perfectly with our OTE or optimal trade entry. So we're not only tapping into a 15-minute fair value gap, but also our optimal trade entry for the fib retracement. This is not something that I've taught on my channel yet, and I'm really only going to be covering in my live streams, trying to get some good engagement. But we actually, instead of just having our take profit at the top of our trading range and our stop loss at the bottom, we have take profit 1 here and take profit 2 here, each of them for half of our position size. If take profit 1 gets taken, we cut our stop loss in half, so it's the same position, size as what we're currently in, and we move that up to 1 tick in profit. So if price reverses and we actually predict wrong on a trade, we not only take profit on half our position, but we take a tick of profit just above break even. And this can cut your losses pretty much in half and allow you to actually, profit a little bit off of your losing trades, or at least about 50% of your losing trades. All right. So we will not have a new 15-minute candle closure below. This would not be our new fib on the 15-minute. If this next 15-minute candle closes above this low and we never have a sweep of this low, then we would have a new fib forming after the next 15-minute candle closure on the 15-minute chart. Currently, that's not the case, and we are just kind of hovering around here. Another thing we want to be careful for, too, is when 9:30 is when the NASDAQ and the New York Stock Exchange opens. So there's going to be a lot of volatility and a lot of strong price movement. We want to be very confident if we're currently in any positions, or just wait once we start getting close to that time frame to enter any new positions. All right, well, still waiting for that optimal. All right, so I will keep an eye on this. And for our new viewer, real quick, sorry for everyone who's still already here. My business partner and I have been really working super hard to bring you guys this, but he's been working super hard on essentially going through each and every one of ICT's core concept videos and giving you really good, summaries of the content, timestamps on where you can watch him go over specific topics, really everything for ICT's core content. And then he also has all of his 2022, which is one of the most popular mentorships that he has released. Essentially, same thing: homework, questions and answers, anything you could think of for each of them. We also have the checklist and picture examples for each of the strategies that we use, and we got to move back to here. Looks like we may have an optimal trade entry, but we've been working really hard, so I haven't been uploading as often to bring you guys some really good content. So we might have an optimal trade entry here. What we do is we wait for a sweep of a level and then a rejection, and we enter on candle close. So get ready with a market buy. We have closed below. So what we're waiting for is a sweep of the lower level and then rejection of it, or for this candle to close above the swept level, but still below our 50%, which would be discount. So we're just sitting here. We're going to be waiting for the next 45 seconds. And we always enter on candle close because it gives us a very clear indication, and it helps you not have to question whether or not your entry criteria was adequately met. If this closes completely below the 79% fib level, then we're just not trading this range and we're waiting for a new range. As I said, we got to be careful. We could be expecting a potential, right screen. If you look actually back at this daily chart, we are expecting potentially a reversal here where we may hit, we're still hoping to form this fair value gap on daily, but looks like we might have an entry. We got 7 seconds left of this candle. I'm hoping price shoves up and closes and rejects this level. If it closes below, which it looks like it's going to, we're just not going to be straight. Another thing we can keep an eye out on is how it interacts with this 5-minute fair or 15-minute fair value gap here. But it already looks like if this were to close down below this 15-minute fair value gap, that invalidates the fair value gap. Honestly, probably just going to be waiting for a different entry. And if we have new highs, lower highs that form, and a new lower low that forms, then we're probably going to be looking for sells instead of buys. So if we look at this 5-minute chart too, we want to look for any 5-minute liquidity. As you can see here, we have a break of structure where we have a clear closure below this 5-minute low. So this could actually be the formation of a 5-minute, what's called order block. I'm still getting used to Quant Tower Zoom. So what would that look like? This, and we would have essentially, so we have a candle closure below this 15-minute fib, so we're going to pivot. We would have an order block right here forming. Candles right there. So if we had a retracement up into here, which is that order block, this is the order block, but that's not the case. It's not a strong order block. What happens? Get rid of this, and we're just going to keep an eye out. Something we could do is let's look at 15. We have 14 minutes before this closes, so if we were to go back to this 5-minute, we could potentially trade this bearish fair value gap. We had it 4 minutes trade here as well, and essentially since we're expecting the price first, it'll probably 30 a.m. Might be able to catch a good trade. And the way I trade these fair value gaps is I have my entry if price were to close inside and then the immediate next candle were to close below, that would be an entry. Or if we have a sweep like we do our fib levels of the middle of this zone, and then a rejection below it, that would be a second entry. And those are really the two entry criteria that we use for these fair value gaps. Yeah, and we could also have a sweep and then rejection, but we want this, we want to still enter on this next candle close. We'd be looking for a second sweep and rejection and closure below. And that's all on the chart still. So let's sit here and wait. Part of the commitments is, as you can see here, always follow every last step of your trading strategy for this trade set. If it doesn't get met or getting out nets you more trade, you don't want to get out early because all of our strategies have a set risk reward ratio that need to be followed every single trade in order to be consistently profitable in the long term. We are always going for long-term gains over immediate satisfaction. We're also not hunting for setups that don't exist. That's why I have checklists for each of these. And if not every single last step gets checked off, you do not trade this setup. Right? So, got a minute and 25 seconds left of this 5-minute candle here. And we are essentially, this will form a new 5-minute fair value gap that we could also trade off of as long as price continues to trend down. So, ooh. There we go. That's only going to form though if this 5-minute closes below. Another thing that we are looking for. Higher time frame. So we're trading on this 1 minute, but a higher time frame high, pivot point high or pivot point low. So if we have a full 5-minute candle closure between below the sell side liquidity, external sell side liquidity, then that would be another break of structure and indication that we're changing direction. Yeah, and we're just waiting for one of these 1-minute candles for price action off of one of these 1-minute candles to interact with one of our fibs. We have a new fair value gap. This candle did close, so we're just waiting. Another thing I'm going to check real quick too is I'm going to bring up, so that 5-minute fair value gap is at the price level of 48.8475. 48.8475 here. 48.8475. So we could tap into this fair value gap up here. And then we don't really have a whole lot of volume-based support, or I mean resistance there. So 85.25. 85.25. Yeah, so our actual resistance would be up here, this little hump that's formed. And that's at 48.8675. 675. Oh wait, down here 86.75. It's actually in between these two. So that would just be an added confluence, is if we had volume-based support or resistance that the price would be bouncing off of within one of these fair value gaps. As you can see here, this would not be a good entry. we're hoping for a candle closure above and then an immediate next candle to close below. We would enter on candle close, or we're waiting for a sweep and a second sweep, and on the second sweep here, we would enter on candle close. Or if we ever have a sweep of the middle of this zone and then a full candle closure below it, we would enter on candle close there as well. Right. I don't know if I would really characterize this as a sweep, but yeah, I'm just going to wait for a clear indication of what I'm looking for. Because we'd never actually swept up into the fair value gap, so we lost someone. That's all right. Their loss. Excuse me. There we go. So we have now swept up into this zone. We want one of two things: for this to close and this next candle to close completely below the zone, or for this to close below and then the second one to sweep again. But it looks like we're going to have a sweep of the middle of this zone. And if this candle, yep, so we're entering a sell here, market sell. We're waiting and hoping price will continue down and bounce off of like that. And our take profit is going to be the bottom of this liquidity here. And our stop loss is exactly half that much. So we'll take this, and we're going to go down here. This is 7 ticks of movement. So our stop loss would be 3 or 4 ticks of movement, which would be right up. Looks like we're hitting it, which is all right. So let's see how many ticks. That's 3 ticks of movement. So 4 ticks, which would be our stop loss, is just above this zone. If price comes up and hits here, then we're probably going to just be getting out of this. We'll wait for our next trade entry. So price very well might shove down though, in which case hopefully hit profit down here. All right. There we go. Keep going. That would be phenomenal. There we go. There we go. We had 29 seconds left to this 1 minute candle. Really hoping price just keeps shoving. There we go. We're almost at break even here. 14 seconds left to this 1 minute candle. This could also form a new 5 minute high, which is another. That would be a good thing as long as this next candle closes down below. And we could actually trade that 5 minute fib. Let's also look at our 15 minute chart here. Keep an eye on what's going on over here. Still 5 minutes left to this 15 minute candle. So I'm keeping an eye up here. I'm going to have a stop loss up here. If it ever touches a single tick of movement up past, so right there, ever comes up and hits that, if it hits one more tick of loss, then I'm out. Right? Still hasn't quite hit our stop loss. Tick a movement, and I'm out of this trade. So I'm out. All right. So what are we waiting for? We are waiting. We were to take this 15 minute here. We still don't have a candle closure here, which would cause a 15-minute fair value gap to the downside. We are still expecting price to keep moving down. Excuse me. Because we do have multiple breaks of structure. We did sweep this low and reject it, so could go either direction. But what we're looking for is we have closed above and invalidated this fair value gap. So we are waiting for one of two things to occur. We take this fib level here. We're waiting for a retracement of this 15 and 5-minute fair value or Fibonacci retracement, which would also align perfectly with the middle of this 5-minute fair value gap. Or we're waiting for a new 5-minute fib retracement to form here with a full candle closure below this range, which would be a really good indication that we're going to continue down in price. All right. So, assume the first loss. That's okay. It happens. Important thing is I had a hard stop loss. I also got to make sure I delete that limit order. Otherwise, that would be good. All right. So, 2 minutes and 23 seconds left to this 5-minute candle. And we're essentially just waiting for. So I have a loss now, so I'm going to actually pivot and not do my max contract amount here. Let's find out. If we were to take this optimal trade entry and have 5 ticks of movement right here, we would take calculator. And right now we have 4,500 in total drawdown. I treat my 150K account like a $45,000 account because of this. So $450 would be 1% loss. We're going to take 450 divided by 5. That'd be $90. So if we had 5 contracts, so then all we do is we divide this by 12.5 because it's 12.5. So we do 7 contracts on this trade. If it were to hit 79% fib level, that is only 6 ticks of movement as opposed to 8. So what we would do is take 450 divided by, what was it, 6 ticks? No. 450 divided by 6 ticks of movement. That's 75. Divide that by $12.50. 6 contracts. All right. So we're either going to do 6 contracts if it hits the top fib. We're going to do 7 contracts for the top. Or no, 6 and then 7. Sorry. No, that's doesn't sound right. 8. Ooh, wrong. So we'll do 8. 4.5. Okay, so we can only do a full contract. So we'll do either 4 contracts at the 70.5 or 6 contracts at the 79. We're just waiting for a 1-minute candle closure to sweep one of these 2 fib levels and then close below it, or for it to close between them and then either sweep again or close completely below the swept level. If it ever closes above the 79% fib level here, then we're getting out. We're not trading this. We're going to wait for a new fib to form. That's another reason too I haven't really been trading the FVGs. I haven't. Honestly, there was no retracement and then continuation of this trend, which is probably something I should have waited for before trading a fair value gap. But constantly learning. So again, we're just waiting for price to take one of our optimal trade entries, which is one of these 2 fib levels, sweep it, and then reject it by closing below it. So as you can also see here, go back to 15. All fucking weird and choppy too. So fucking weird and choppy like that. This essentially, this would be our 15-minute order block here. So technically have a 15-minute order block here, as well as a 5-minute fair value gap. If these levels get hit, that's a really good sign. All right, so enter here to here, that'd be 20, 18 ticks of movement. Let's see. Sitting here waiting 18. So we do 4 times 12.50, 4 times $12.50 times 18. So if we enter here, that'd be a $900 take profit. If we're to enter here, it'd be 12.50 times 6. And how many ticks of movement? 21 ticks times 21. If we were to enter off this fib level, somewhere in between here, you're looking at about $1,500 of profit while risking only 1%, which is 450. If I make back what I have lost, then I will move back up to 15. Again, the only time I ever trade full contract size is if I have free resets on my account, which I currently do. Anyone watch to any questions or suggestions or anything at all? Ask anything. It's not financial advice, but I will answer to the best of my knowledge. And if I don't know, I will admit it, and it's something we can figure out later together. So we might have a new 5-minute. No, that's not a high. That's a double top. Not going to use that. Let's see. Any sense either though, because we have this wick that formed up here. See, these charts are just being fucking funky as fuck. So this is actually a high. If you look here, this wick over on this 1 minute is well above and up around this 50% equilibrium right here. So this will be a new, from here down to here will be a new fib that's formed. I'm going to mark it on here just because for some reason my higher time frame charts are being kind of fucking wonky. Really weird. Not food. All right, so 20 seconds when this closes, we're going to have a new fib retracement that's forming right here. It's a 5-minute fib. I'd also like to check a 15-minute chart. What's left of this? Yeah, if this were to completely close, as you can see, this should be up here as well on the 15 minutes. So if this, that wouldn't be a high that's formed because it's not higher than this, but it does look like we're moving down. And price is going to continue moving. So we're going to trade off this 5-minute fair value gap. Call it fair value gap fib retracement. Right. So weird. Our 1-minute chart. So same deal. Trade entries here. Waiting for 5 minutes. 1-minute candle to interact with one of our two levels and then reject that level by closing below it. Look here too. I do not see any fair value gaps that align with this entry. Oh, no, that's not true. All right here we have a 5-minute, but again, these 5-minute candles, 2-minute candles have been really freaking lumpy. But we do have a 5-minute fair value gap that aligns with our OTEs for our fair tracement. The same deal, we're going to measure here. We have 3 ticks of movement versus 4 ticks of movement. What we do is 3 just how much we make up each tick of movement. We are here, we're going to do a 12 contract trade, 450 divided by 4, divided by 50. And we are entering off the middle here, we'll do a 9 contracts trade. 9 and 12. Get into a 12 contract trade here. It's $12 or 12 ticks. Well, so we're looking at $1,800 versus 9 times. This one being about 11 ticks. 1,200 to 18 bucks. It's nearly 1% off. So if we react off of this retracement level here, we'll do 9 contracts. Off of this one will be 12 contracts. I might even do 8 with simple. If we put slightly below this, that's actually going to be an extra tick of movement to that side. So we'll do 8 and 11 contracts. So we're just waiting for a 1-minute candle closure to interact with our fit levels. And again, we always enter on candle close because it allows you to have a. You always know if you're entering on candle close, there's no doubt that your entry criteria was met. So we'll get ready. We'll start with, what was it, either 9 or 12. So we will do 11. We'll get ready for an entry off of this level. All right. Price is swiftly moving up. We have closed and taken this low, so we are forming new lows and clearly new lower highs. So here we go. You didn't wake up in time. Static? Is that any better? Or sorry. Is that any better? Still acting funky. And thanks for letting me know. Here. Perfect. I gotta get served me for like 5 to 7 years. It's the recording mic, but I think the inside jack for the XLR cable is getting a little fuckety, fucky wucky. So yeah, I appreciate letting you know. All right. So we're just waiting. Just waiting. Also, another thing, my friend and business partner just pointed out too on Discord is we are encroaching on the 9:30 a.m. market open for NASDAQ and for the New York Stock Exchange, so we are going to want to be careful. It kind of acts like news. You're going to see a lot of price movement volatility second it opens. Such. But now it's consolidating back to equilibrium. Range from Asian out. So another thing I want to check too is I'm going to mark this 8 a.m. open while we're sitting here waiting. I'm going to mark 3 a.m. open as well, which is London open. Why am I doing this on the freaking 1-minute chart here? What I'm going to do is I'm going to keep an eye on our levels here. On the 5-minute chart, I is looking for 3 a.m. open over here, 6 p.m. Previous day, right here, 1800. Sure. 1800. Reason for this is I'm keeping an eye on for all day price movements, we also want to keep an eye on the highs and lows here. Lock this. Oh, we have a new, slightly new lower low. So we need to go here to here. There we go. We'll lock that in for looking for a new low. So as you can see, we have the high of London here and the low of London here, high of Asian session here, low of Asian session here. We will want to be careful and keep an eye on these session points, high and low. Right now, we're looking for an interaction with London. Let me zoom in. I still gotta get used to this zoom. Still not used to it. All right. My last account was Top Step X, which uses trading view charts. I miss trading view charts so much. So horizontal. That is the low of our London session. We are going to wait and we'll see if we have a 5-minute candle closure completely above or below this. We will be expecting a movement to that direction. Another thing that could happen is we could have 1, 2, 3 separate 5-minute candle closures or rejections, I mean, where the wick hits one of these two levels, and on that third wick and rejection, we can enter in the opposite direction. That would be a reversal or a Judas swing. We would only be looking for that Judas swing if it were to the upside and then back down. The reason being is we would also be above our Asian session high. If it were to the downside, we would need it to reject off of the Asian session low instead, because it needs to be the lowest of these two sessions. That's what it will 1, 2, 3 wicks and then reject up for the rest of the day. So we are also looking for those reversals or breakthroughs of these sessions. Another thing we can do though too is if we see a clear 5-minute candle closure here, we can look for a retracement to an FVG or a good fib level to trade off of. And we can trade that all the way down to the Asian session low. We will take a strong, hard take profit here. We will not trail that take profit down here simply because we are going to see how price action interacts with this Asian session low. And it very well could reject and reverse back up for the day and for the rest of the day. Will do, my friend. Oh, stretch. So, yep, we are still just waiting for essentially a rejection of one of these two levels. Another thing that I'm seeing here too is, let's go here. That's the bottom of this wick right here. So back 1, 2, 3. Yeah, that was definitely, this should be where the wick of this 5-minute candle is. So I got to figure out why the data feed here is so fucked up. It comes straight from, so with futures, that's one thing you don't have to worry about. It's a software technical issue. Oh, nice. How long did you start your 150K? How are you doing on it? Also, I don't have it posted here, but I'll find in a minute my I don't know if it works on every single combine that you purchase or if it's just your first ever one. It's been weird, but I have a affiliate link that gives you a 20% discount for Top Step. And if, again, since you've bought in a combine before, if it doesn't give you the discount, I would still, greatly appreciate. Last week I'm around 156. Nice. That's awesome. Good for you. What's your trading style like? Oh, we're looking here. Potential trade entry. That's awesome though. Good for you. What kind of setups do you trade though for just in general? Might have an entry here. Grab this so you can clearly see. Lock this down. So again, 9, we're gonna do 8 if oh man. God damn dude. So does it give it to us? Trade it. Yeah, what kind of setups do you use? Trying to hold longer, MMX, and mostly. Interesting. MMX and concepts, income-based approach to trading. Oh, it's the ICT market maker model. Gotcha. That's cool. That's cool. I actually haven't dove into MMXM yet. Do you have any like good content or anything? Because I know like a lot of times people have trouble with ICT because the way he explains things in his lectures aren't the always the best or the easiest to follow. If you have any good on content, like third party content on the market maker model, that would be freaking greatly appreciated. I'll watch it. I was thinking about doing reaction videos to third party content that I found, like from content creators that I found was really good. Um, Stuff that I haven't watched yet. So like new content that they're coming out with, and I can kind of go over in, my understanding of what they're trying to show. But I mostly just follow anything that's ICT related. It seemed to have brought me consistency or relative consistency. So before I would normally trade this as a trade entry, a rejection of this low here, but I've really just been doing the OTE T trades. Okay. I'm gonna write that down. The note head. Go to my content note. Content T trades. MMXM. Market maker. Market maker model. Cool. T trades. No, I appreciate that. All right. So and see, like this would have been a good entry, but I just didn't hit my optimal trade entry. I've been trying to just trade off of this middle fib for the most part here. Ah, that sucks. That's all right. No FOMO. No FOMO. All right. So another thing I'm going to watch too here is if we were to have a break of structure to the upside here, I'm going to watch the, nope, this would be my, it's not a very big or strong order block, but we got 10 minutes. So I'm probably going to just chill and wait out this New York Stock Exchange open. Uh, Man, this would have been a really good entry. See, I changed something because something else seems to work more often than not. I would have taken half profit here, and this would either continue down to here, or I would have moved my stop loss to just below break even and made another tick of profit there off of this potentially losing trade if it were to reverse in direction. But I've only been really trading off of these OTEs, optimal trade entries up here, these levels. Mike still sounding better? No more static? Something else I haven't really been looking at before. That wouldn't have been a breakout because, oh, like right here. This would have been, see, I should have been looking for my 1 minute breakout strategy. Look right here. This low that formed on this 1 minute, we have clear displacement. And the way I describe displacement is if we take the candle body of this candle here, and then we were to move this down to here, you can see we have clear displacement and closure below this candle's wick. I would have entered a 1 to 3 risk reward trade at candle close here with my stop loss at the top of the candle and take profit 3 times that distance. At 2R, I would have had a trailing stop, essentially the same thing that I do with my 27% fib level. There we go. Man, I wish I saw that. That would have been a really, really good entry. All right, so this is why we don't have FOMO. We may have a better entry coming up right here. I'm going to trade exact same way. Take profit 1 here, take profit 2 here, stop loss up here, take profit 1 gets hit. We half our stop loss so we don't end up entering a trade by accident when it gets hit, and our stop loss will go to 1 tick in profit. that curbs all risk on that potentially reversing or losing trade, and we make a little bit of money off of it too. No more stake. Awesome. Good to know. Yeah, if that ever happens, I just got to push and jiggle the cable. Oh, come on. What is this? Let's go. Take this level or this level and then close below it. Reject. So I think I said 8 contracts here. We'll do, I think it was 9, depending on how far down it closes. But I'll do 8 contracts, 4 TP here, 4 contract TP here, and then my 8 contract stop loss up here. All right, so we're gonna sweep that next level and give me an entry, or just gonna twiddle your thumbs price? Use. Let's see. This could be our trade entry. So we would do 8 contracts. Market sell, but we also need a closure above the 50% level here. So, and since we're so far down, I might do 6 contracts instead because we are way below this level, which would really increase our risk for that trade. Oh my God. And we're not trading this. Good thing. Dear God. Yeah. So since we have a clear displacement and like candle closure above this fib level, we're not going to trade this. And this looks like it might be a breakout to the upside. I'm not going to trade a breakout trade because we don't have clear 1 minute liquidity here that we displace through, but we will watch what happens. The bad trader in me wants to just fucking straight up 15 contract. So we're just going to wait. If we have a candle closure on the 5 minute in 1 minute and 20 seconds from here above this level here, oh, I have to do it on this chart right here. Because remember, for some reason, our 5 minute chart's being fucking all fuckity. We're going to go here. We have a full 5 minute candle closure above this level. We have a break of structure to the upside on the 5 minute chart. We're going to actually start looking in the direction of daily bias again. This is another reason, though, I only enter on candle close, because if I didn't enter on candle close and it just took my trade entry, I would have just fucking gotten stomped the F out on that entry. That would have sucked. But that's also why I look for candle closure. It closed above the highest fib level, and because it fully closed above it, I'm no longer trading that trading range. I'm going to wait for the next range to present itself, which there is one right here. So if we have a full 5 minute candle closure above this 5 minute right here, this 5 minute high, which it's literally hovering on, what we're going to do is trade this new fib range, right? Yep, that would be from here to here. We have 1 second, and we didn't close above, but I'm just going to keep an eye then. If we have a 1 minute candle closure above this level, then we'll keep an eye on that level. But as you can see, we swept and then kind of rejected that 5 minute candle high right here. But if we have a 1 minute candle closure above it, then I'm going to start trading this fib range right here. Another good thing for this trade setup too is actually 15 minute for a second. This has been fucky too, fucky wucky. But this would be a potential order block there on the 15 minute. I can't even trust any of this bullshit, but it's just so off. So off. We do have a full 1 minute. Nope, not yet. But we do have a 15 minute fib retracement right here. And it's now in the direction of bias, so it's not a terrible entry. So I think I'm going to trade this fib, this new trading range here, because it's not only a new 5 minute, but the newest 5 minute, but it's also the newest 15 minute. once we close in 3 minutes and 26 seconds. This will be now a 15-minute fib retracement once this 15-minute candle closes in 3 minutes. So probably going to end up trading this range. Oh, my hands are freezing. I gotta go take a piss so bad. Wait. Lay it to see, lay it to see, lay it to see. I also think I might switch. If I'm not going to trade FVGs any longer unless it's like silver bullet kill zone time frames. I have really good luck with them there. It's just I've been really trying to figure out good additional confluences for my fair value gaps. I know you said that you trade some imbalance FVGs as well. So if you have any good videos on that too, or any suggestions, I am all ears. Because outside of those silver bullet kill zones, I haven't had the best luck. I have some good luck with them. It's just more times than not. I mean, on each of them, I do a 1 to 2 risk reward. I target the nearest liquidity in the direction that we're trading, and then I'll do half of that distance. So, like, I can win more than 4 out of 10 trades on them, and I end up. It's just, I prefer not to trade anything that I don't have at least a 60% win rate on consistently. That's why I've been kind of avoiding them. I do have like a 60 to 80% win rate when I trade them within the kill zones, but outside of those silver bullet time frames, I just can't lock down those FVGs very well. All right, so we have New York Open, or New York Stock Exchange and NASDAQ Open in 2 minutes. So I'm still kind of debating. Be right back in 2 seconds. I'm going to go real quick. I probably won't trade this anyways. Nothing yet. That could be our entry. That could be it. Not quite yet, but the New York Stock Exchange is opening. So I'm hoping for this to freaking take this OTE down here. I mean, even if I was still trading those 62% fib levels, that wouldn't be a good entry because we still closed up above in our premium zone of this trading range. So this is our newest fib retracement. Cool. All right. Well, New York Stock Exchange and NASDAQ is officially opened. So let's see what we got going on here. Until I win another trade and get back up, I'm not going to do my full contract limit. Let's see. Come on, baby. Either form a new 5-minute. We do have that new 15-minute that's formed right here. Back down to the 5. All right. Looks like it really wants to push up past this high. I'm just going to keep in mind what's going on. All right. We're just waiting. Waiting. I haven't even looked at the DOM. Probably could have avoided that loss if I was. So down here at our 70.5, 4884, 50 cents, 4884. We do have some volume-based support down by our entries here, but does not look like we're going to be moving that direction. We did form a new high, so we're going to retrace our fibs up to that new high. Yeah, these not being correct. So like one thing that I really like with futures is you never really have to worry about manipulated data because all of your feed comes directly from the CME and COMEX and those exchanges as opposed to being a broker interpreted feed. But clearly Quantower is having some fucking issues right now with these higher time frame candles not being correct. Yeah, so here we go. We have officially taken our London session high. If this 5-minute candle closes above, we're going to be hunting for buys, strong, hard buys. But if we have 3 rejections off of this level on the 5-minute time frame, we're going to be looking for a reversal. We'll enter on that third 5-minute rejection to the downside. Keep an eye there. Going to still getting used to this new platform. Drag my fib up. Let's see. Dude, that's annoying. That you could be clicked on this and then click anywhere and it will. It's annoying as hell. There we go. That's why it keeps happening though. All right, so it's like we are going to have a clear 5-minute candle closure here above this London high, which means we are probably displacing for the rest of the day. We look, we zoom out. We would have clear manipulation from the high that forms here in London, shoves down, and then this would be distribution. At least that's how I'd be interpreting it. I should have entered long. Do we have, yeah, we kind of had displacement here. Not really. That wouldn't be a 1-minute candle displacement for me. It would be a 1-minute breakout in my opinion. So price might keep pushing. Either that or this could be manipulation before we start moving down again. But we'll see. I mean, we have 28 seconds left to this candle close until this 5-minute candle closes above London session high, in which case I'm going to be looking for an entry somewhere between this movement. Maybe I will. No, as I would go to. It's going to do 5 contracts right now. Said I wasn't, so I'm not. So what I'm hoping for is the only thing I could see really happening here for an entry is if we close below or we form a 1-minute high and then we have a clear displacement above it. That would be a 1-minute breakout trade to the upside. That's really, I think, my only hope for entering off of this price movement. Otherwise, probably not much else I can do. Either that or for this fair value gap here to form on the 5-minute, and I could trade off of that fair value gap to the upside. But we did have a full 5-minute candle closure above this London session high. We have 3 confluences for a bullish bias, so we are technically looking for buys. But we do also have to keep in mind that these are all-time like highs. Like I don't know how long these all-time highs could really keep pushing, you know? We uncharted territory here, my friend. So we still have 3 minutes and 50 seconds left to this 5-minute candle. What I want to see is this to close bearish and below this 1-minute high. And I want to see a clear 1-minute closure above that high. And that would be my entry. Price very well might bounce back out all the way back down though, before that occurs. Excuse me. Get rid of this. There. Do I have any other missed entries? Missed opportunities? Keep moving down. Could be manipulation up and then a reversal for the day too, because that's something else we want to keep in mind. We ever have a full 5-minute candle closure below this high too, then we're going to keep an eye on what's going on. All right. So probably could have traded off of the support that was formed by London high too, because as you can see, we came down, touched it, and then just started shooting back up. I haven't been trading those, that kind of setup, so I am just waiting. No FOMO here. We will have formed a 5-minute fair value gap here. So in 2 full minutes. All right. Let's see what happens here. If we have a strong displacement to the upside here, we will enter with the bottom of our candle as our stop loss. Not sure if that looks like what's going to be going. No. Let me take a look over here too at our a London high here. Yeah, 1 minute and 11 seconds left to this 5-minute candle here. All right. Let's see. I'm not really using that daily any longer. Drag this up over here. Oh, no, yep. Okay. So it's 1, 2, 3, 4. This is the last chance for that breakout I was talking about. If it's more than 3 or 4 candles off, distance, then I usually won't trade a 1-minute breakout. Further away from that formed 1-minute high, the less of a chance it's going to be respected and actually keep moving. So we did have that 5-minute FVG that formed here. That's something to keep an eye on. The top of it is formed off of London session high too, exactly. It's interesting. Let's see. Right. Let's see. So over here on the right, oh, no, turn that off. There we go. So over here on the right, you can see we have resistance, volume-based resistance that's forming here on the DOM. We also down here, let's see, prices for 48.89, 48.89. Down here, just below the midpoint of our fair value gap here, we have giant pending order at 48.87, and we also have volume-based support at 48.88.75, right around the middle of our fair value gap. So if we were to bounce off of this, that would be a really good place to enter off the middle of this fair value gap, because we have some volume-based support right here, this little mound of orders right there. We also have this giant pending order, which could be any guess as to what's going to happen there. I've seen these before and they just never end up getting hit, but we'll see. So I'm going to enter off of the middle of this fair value gap here, which will also probably line up with potentially our fib retracement. Not quite off equilibrium though, but I'm going to enter off the middle of this FVG here to the upside. Then we're going to, that is 25 ticks, so 12 ticks, calculator. 450 divided by 12, 37, perfect. So that would be exactly 3 contracts. And then 12 ticks be down here, just above there. Here-ish. It's 10 ticks. Ticks. Oh, it's going to be our entry. All right, so candle close here in 10 seconds could be our entry to the upside. 5, that's fine, ask. Market buy right there. My take profit is going to be top of this range, and half of this distance is going to be my stop loss. 19, so we'll say 9 ticks in loss, which is just below our entry. Oh, a bit further. Pretty much down here. So we'll keep an eye though, hoping that we push up instead. Come on. Another thing too is I'm going to watch this and I'm going to probably trail this take profit. But if we ever come down to hit this after moving past it, we'll get out there. So mark this with a high. Good movement off of this volume base. Port right here. Hopefully we just start pushing straight up and past it. Bottom of this FEG is a stop. Come on. Don't be a little yatch. There we go. Again, we're going to start trailing this entries take profit once we hit the top of this range. And we'll just keep trailing up because we are expecting in pretty much all day movement since we had a 5-minute candle closure above this London high here. So I'm expecting this to move up and up and up and just form new highs pretty much all day. So I'm going to trail this right here. Every time we have like 2 ticks or 2 full candle closures above our initial take profit, I'm going to use the bottom of the second candle out as our trailing stop loss or trailing profit stop. So it's going to keep watching. So we've taken half essentially of this position here. So from here, I'm going to actually exit if we are ever about a tick in profit. So let's see. 2 ticks, 1 tick, wherever around here again, in the middle of this candle. I'm just going to get out a teeny tiny bit of profit. This is quite finicky for me. So, let's see. We're pushing. Still pushing. Look at the DOM here. If we can push up past this volume-based resistance here, then we'll be in a good spot. Looks like we might bounce off of that instead. Come on. Almost there. It's smooth sailing if we can get up past this here on the DOM. You can see all this volume-based resistance here. If we can get up past that, it's smooth sailing. We have no resistance formed up above it. So, might be smooth sailing. We just broke up above. Oh. Building up more volume around these levels. Hopefully we don't reverse back down. Oh, that's a big push. Keep going. There you go, baby. Come on. There we go. There we go. That looks like it's wanting a push. There we go. That's what we're looking for. So what I'm looking for is I'm going to start trailing once we hit this point right here. If we have 2 candle closures above and we ever come back down to meet this level here, I'm going to get out. So stop right here. Bring the stop below price right here. That'll secure me a teeny tiny bit of profit at the bare minimum. But I'm hoping that we're going to push up. As you can see over here, we are forming volume-based support on the DOM here. I'm hoping we're going to push up where there's really no resistance there. Move back to my center screen. Currently up about $812. So we're just going to keep watching and observing what price does. We're still building a bunch of volume-based support right here at these levels. So just going to keep an eye out on that. That's also why I have this trailing stop order here, because we'll scalp a little bit of profit if it ends up reversing instead. But I am expecting, for the most part, price to just keep moving up for the majority of the rest of the day. But it could go either way. Price is never going to do what you think it's going to do. It's going to do whatever the F it wants. Right? So we have built a lot of potential support right here. I'm really hoping that we push up past this level here. And if we do, it should hopefully be smooth sailing. Otherwise, again, we got this order here just in case. But this could end up being volume-based resistance instead to the upside. So we just got to be careful. And that's why I'm trailing this. So let's come on. Really hoping we end up with a push to the upside, because that's what it looks like it's gearing up for. There you go. Come on. There you go. We have 4 minutes left to this 5-minute. We just started a new 5-minute candle, so see where this goes. See where this goes. I'm hoping up all day. We had a London breakout, and we actually got in just because we waited for this retracement of this FVG. We got in just above London high, which is where we expected that breakout. So you always wait for a retracement and an entry back further down below your breakout trade. You never want to enter on that candle close. Otherwise, we would have entered like way up here, and we'd barely be in profit right now. So same deal. If we have a full 5-minute candle closure above this high, we're going to start trailing that. So let's see. Still waiting. We might have another bounce off of this volume-based support before we shoot up, or hopefully, knock on wood, shoot up. Hopefully we don't break below it. We are. Holy crud, look at all this volume entering the market. A lot of it is buy side volume. Let's see, look here at the times and sales. We have a lot. We are not yet far outweighing, but we have a lot of buy orders entering the market. I'm really hoping this is going to help push price up, because if we can break up past this high and have a full candle closure above this high, we are looking at another big movement to the upside, in which case we're going to trail our take profit. Come on. There we go. All-time highs. Where are we on this daily chart too? If we move back out to the daily over here, apply. We are all-time highs right now, so hopefully we keep pushing those all-time highs with another giant movement up. That would be phenomenal. 3 seconds left and we'll have a full candle closure above our take profit. What we're looking for is, if we have another 2 candle closures above, we're going to trail this entry at our original take profit. Again, every 2 full 1 minute candle closes, we're going to trail that entry. So I'm hoping for a nice big push up. We have 1 minute and 40 seconds left to this 5 minute candle. Come on. I have now broken even for the day from my first loss. Yup, and there's that big push. Come on, keep it pushing. Maybe I should have entered 15 contracts. I'm not going to worry about that. No FOMO. There we go. That's what we're talking about right there. So if we close up, not this candle, but the next candle, I'm going to move my take profit, my trailing profit stop, to our original entry. Right here. I'm going to get out at least that much in profit, but I'm really hoping we're just going to keep pushing highs, new highs. You got 48 seconds left of this candle. This is also the last 1 minute candle of our 5 minute candle. Man, they just all had to leave before I had an opportunity to perform. All right. So we're trailing this. Hopefully we don't have a reversal, but if we do, then what can you do? All right, 18 seconds left to this 1 minute candle. Hopefully we just have another big push up. This would be the first full 5 minute candle closure above this buy side liquidity here too, which indicates we should be moving up. The only thing is we're uncharted territory. We don't have another point of 5 minute liquidity to judge what we're going to do off of this. Normally I would trail all the way up to that next point of 5 minute liquidity and see how price reacts off of it, but this is all-time highs right here, so we really have nothing to go off of other than just trail every 2 1 minute candle closes. This is my London breakout trade though. All right, let's see what happens. 48.66. I'm officially up for the day, ever so slightly. All right. Hoping we keep moving up, though. Let's see. We're building volume around this price level right now, as you can see here. I'm debating. Do I want to? I wonder why my entries aren't showing on my... Oh, because the daily chart, maybe, if I move down to 1 minute. No, it still doesn't show my entry. Weird. Well, I'll put this back to our 5 minute over here so we can keep an eye on what's happening. Be waiting for another 5 minute candle closure up to the upside. Price could still reverse though, in which case we're going to look at a potential retracement of this 5 minute fib right here and actually mark it on the 5 minute chart right here. Get rid of this liquidity line here. But yeah, if we come down and hit my trailing profit stop, then we will look for another entry off of Let's delete all this extra noise on the screen. We'd essentially be looking for another 5-minute fib retracement entry here off of this optimal trade level here. In which case we'll get out here and we'll just wait for another entry. This 5-minute candle could also form another fair value gap right here. But again, actually we're about to hit silver bullet time. So I might actually trade a fair value gap if a good solid one forms on the 5-minute chart. It looks like here we might hit our TP. All right, cool. We just made, I am just about break even for the day for my first losing trade. I'm going to wait for another good optimal trade entry off of this fib level here or this fib level down here and trade exactly how we did before. All right, let's fucking go. Only down $37 for the day. I have recovered my account from my first loss. All right, same deal. Just trade off the bounce here. I am recovered, so I'm going to do what I said I was going to do. Again, I would never, ever normally do this. This is because I have 2 free resets on Top Step right now, so I'm really trying to just pass this 150k ASAP. Because I know that I can reset it for free and get another swing at this. All right. Looks like we may not fully reverse. We will see, though. Find out. Only time will tell. Only newly formed candles will tell. God, it's so freaking cold right now. Look at that. That was actually a 5-minute fair value gap. That's the one that we entered off of. No duh. That's a 5-minute fair value gap. Duh. All right, so no entry so far. We can also look for those 1-minute breakout trades. Remember, we had one to the downside way back here that I never took. That would have been a really good trade with the trailing, profit stop from 2R all the way down to potential 3R. So again, we could have another potential breakout trade on this 1-minute chart to the upside again. So we'll find out. I wouldn't have considered this a breakout trade because we had already swept and taken this liquidity here. So not what I'm looking for in a 1-minute breakout. Let's see. Same deal though. We could have a freaking giant move down, and I'd be very careful about entering off of these. Probably would not do my whole 5-minute or 15 contract thing. So we'll find out. Let's see. This is what? 11 ticks. This is 8 ticks. Eight. It's gonna be 4, so 4 contracts off the bottom of that. Oh. Okay. 4 minutes left to this 5-minute candle, so we do not have a new fib forming yet. So we got to wait for this 5-minute candle to fully close. We will retrace to the new high though, so just keep an eye on what's going on. Also, if you see anything in chat, oh, we don't have any viewers any longer. Whatever. Four contracts. The other one was 11 ticks, so it'd be 450. 11 divided by $12.50 be 3.5. So 3 contracts and 4 contracts off of this fib right here. The 4 and 3 contracts. Let me turn on so I can hear you. Open volume mixer. Should be able to hear you on. Weird. Are you? Oh, you're on mute. You can talk, Eric. Nobody's even watching the stream any longer. Did you get in on that entry to the upside?
Dang, bro, I was in a almost made an extra $800 just now, but then that fucking sweep down just got me. This sweep down just got my break even.
Yeah,
So now I'm
yeah.
up 750. I'm up 750. Every read I've read so far has fucking been on point.
Yeah, me too. I got out. I trailed my profit stop at the high, our original take profit, and I got out like 1,100, 1,200 bucks in, and then I actually recouped what I lost on that first trade. So now I'm just waiting for another entry to the upside because it looks like we're pushing new highs.
Where's my fucking fair value gaps? I lost my fair value gaps. Damn it.
Yeah, I don't have any 5 minute fair value gaps right now, but my charts like
No, I did. I
have
mean, that's what
been
I entered
real
on.
fucky. Yeah, my charts on the 5 and 15 minute have been real fucky wucky. So I've been having to compare it to my 1 minute chart, which is solid. But it's all right. I mean, I'll be fine. I've been doing all right. So I'm just waiting for this fib retracement right here onto this OTE, this optimal trade entry.
All my shit disappeared.
Like your drawings and shit.
Yeah.
Interesting. Yeah, this is also no, this isn't a 15-minute FVG, but I also can't tell because of how fucky wucky my higher time frame charts have been. But I'm on a 5 minute fib retracement here. And so I'm waiting for an
Damn it, bro.
OTE off of this.
I almost hit my 1500 for the day.
Yeah, it's good though. That's not a bad thing. I mean, that's what I'm aiming for is my 4,500. I've been doing really been trading hard. So I didn't trade. I just ooh, big.
Here's some crazy shit going on.
Yup. So we have 29 seconds left to this candle close. I'm going to be careful though, because this would be clear displacement. This is a 1 minute breakout to the downside. So if this closes below the 79% fib level, I might enter a sell. Because we'd have a 1 minute breakout to the downside and a rejection of this trading range. Yep. It's looking like it.
I'm only entering buys.
All right, here we go. We're going to keep pushing. Keep it pushing.
It's crouching on the 62 range for buys. Hoping it hits. That would be a fucking big ass win. Gonna
This
fucking do
will
it.
be too if we have a breakout like I'm expecting to the downside. We have broken out and closed below our fib levels, so that's one indication that we're pushing down. And the second indication that we're pushing down is the 1 minute breakout entry that just occurred. I'm really hoping we keep pushing down past this volume based support that we just hit. But looks like it's reversing. I'm getting out.
We're honestly we're fucking shit, yes. Damn it. Wait, where's my fucking drawings, dude?